Good morning from Los Angeles, gloomy Los Angeles, unlike my background. That is my house, by the way. So, welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Um, we are back on the sell train this morning. It's a Friday. After a dead cat bounce, we're selling off. So, good morning to everyone in the West Coast. Good afternoon, everyone in the East Coast. We'll have a lot to talk about today, and I'm going to get right into it. Besides, I appreciate all the support for the channel. I am not wearing my Know Your Worth shirt to advertise that the members get a free Know Your Worth t-shirt, but I think everyone knows. So here's the schedule. Hope you all had a great holiday season and Merry Christmas. And every Monday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Every Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Every Wednesday, Members Only Live, 3 p.m. Pacific, 6 p.m. Eastern. So I'm quite busy doing these live streams. And more importantly, if you do choose to become a member, you will be able to join those members only lives. Those are amazing, to be honest with you. So that's one perk. You get the weekly extra live stream, almost like a one-on-one mentoring coaching session. More questions asked and answered and ideas exchanged. But you will get a $30 t-shirt for free, including shipping, that says #know your worth. In this life, we have to know our worth. Most members got it already. If you do choose to become a member to support the channel, we appreciate it. There's a lot to discuss today. I mean, from Michael Saylor going all in on Bitcoin with a special shareholder meeting. Share count is about to go skyrocket. Volatility is picking up. Probably on Monday, I will put out my year-end targets for next year, what my crystal ball is telling me. Today's sell-off is kind of expected as far as I'm concerned. Now, every Monday, Wednesday, and Friday, please go check the community tab on the YouTube channel. I post all my positions, full transparency, losses, gains, all of it. And as you may have seen, as of yesterday, I had 30 of the January 17 expiration 595 puts. They are deep in the money now. I sold them between 5.5 and 8 this morning. They're a little higher now. We're going to discuss a lot today, so let's get right into it. Good morning to everyone, to all the members and new viewers, and good afternoon if you're in the East Coast. So I've been talking about this subject for quite a while. As the title entails, the Federal Reserve went from QT, meaning quantitative tightening. They pivoted to QE and started cutting rates. That started about September 18th or so. The first rate cut was 50 basis points. The second one was 25 basis points, and another 25 basis points, which was a couple of weeks ago. And what happened? What happened since the Fed cut the rates? The bond market is not buying anything the Fed is selling. Not at all. So one of the very few times that I can remember in my past 30, 35 years of trading, something very, very weird or something very unusual is happening. That is, Fed is on rate cutting phase. The bond market is increasing the rates. In fact, it is shocking to me that how, the Fed rate cut versus the bond market increasing the rates is mirroring each other. So when the Fed starts lowering the Fed funds rate, the bond market usually follows. But what the bond market is looking at is much more than what the Fed is saying. The Fed is saying inflation is fine. Unemployment is fine. We're getting into our 2% inflation target with full employment. Bond market's not buying it. Bond market is looking at what I've been talking about for 4.5, 5 months since I started this channel, which is the national debt at 36 trillion. In about another 75 days, we're going to be at 37 trillion. And the cost of borrowing of all that money, which is up to 1.2 trillion now. I've done multiple videos on the channel. You can go check it out. And to me, that's what the bond market is saying. Another thing bond market is saying is with the new administration, if they cut the taxes like they promised they will, I don't know how Doge is going to manage cutting spending, but what the bond market is seeing is that inflation re-accelerating. I even talked about this called stagflation, right? A stagnant economy. The reason the Fed is cutting rates, they're seeing the economy slowing down. There is no ifs and buts about it. There is no other reason for the Fed to cut rates. When the stock market is at an all-time high, when all hard assets are all-time high, including real estate, gold, everything else, why is Fed cutting rates? Fed is seeing trouble ahead. Well, what the bond market is saying is their trouble ahead is a reinvigorated or refired inflation. Inflation is not 2%, people. Inflation, when the government gaslights you and tells you it's 2%, it's not. It's running about 6-7% a year. That's due to the debasing of the currency. That's due to the printing of and spending, and the bond market's seeing it clearly. So when I talk about this, and I did a couple of videos on stagflation. Now, actually, those talks are coming around. I'm seeing a lot on Twitter what people are talking about, and this is what's happening. I follow the Kobesi letter. Please go follow him on Twitter. I'm on Twitter as well. If you do follow me, I appreciate it. I post quite a bit. So it's official. The 10-year note yield is now up 100 basis points, exactly 100 basis points since the Fed pivot began in September. In other words, while the Fed has cut rates by 100 basis points, rates in the market, now this is the bond market, the 10-year note, have risen by 100 basis points. Is this the biggest market to Fed disconnect in history? I call the segment Fed has lost control of the bond market. And if you guys can, take a look at the right-hand screenshot, it's pretty clear. So the blue line is the US 10-year note, okay? And that's what the bond market is doing. Bond market, this is when the Fed started lowering, as you guys can follow my arrow, this is when the Fed started lowering the rate, September 18th. They cut it 50 basis points, and here's the Fed funds rate right here, okay? That's the scale on the right-hand side for some of you who cannot see it. And this is the bond market rates, the actual bond market rates. Well, the Fed has cut 100 basis points. The bond market has raised the rates by 100 basis points. There is something happening here that I have not seen for a long time. And this happened in the 80s, one more time, when Fed Chairman Volcker was trying to kill inflation. And it didn't end well for the asset classes. It did not. So to summarize this, Fed is cutting rates. Globally, all central banks are cutting rates. They are seeing trouble ahead. But the bond market is saying our trouble that we're seeing is inflation coming back, or inflation not going to the target rate of 2%, economy slowing down. With the new administrations cutting taxes, the debt deficits are going to go higher, national debt's going to go higher, and the bond market's pricing everything correctly. I always follow the bond market, and the disconnect between the bond market and the stock market, which I'll discuss later on, is also very evident. And today, at some point, this is going to break. When I say break, I'm not talking crash. I'm not talking anything like that. What I'm talking is that when a bond market's raising rates, the stocks have to listen to it, okay, at some point. And, today is last Wednesday when the Fed cut the rates by 25 basis points. We know what happened. We had a massive down leg. After that, we had a little dead cat bounce. We literally bounced back to the trend line that we broke, and now we're rolling over. So we'll see. But this is something you guys should follow. So how can you follow this? You can follow it by TLT. TLT is the 20-year inverse ETF. Look at the chart of TLT. If TLT is going down, that means interest rates are going up. So the bond market is a lot bigger than what the Fed can manage. It's trillions and trillions of dollars. Fed has lost control of the bond market. Simple, no ifs, no buts about it. And am I concerned? Yeah, I am concerned. And the stock market's going to pay attention to it at some point, because Fed is saying everything is fine, don't worry about it. Bond market is saying, nope, everything is not fine. We know what we're doing. We're going to keep raising rates until we believe that the new buyers of the debt that the Fed has to issue when the old bonds mature have to get a decent return. And that's what's happening here. And it is all due to our messed up fiscal policy, which is followed by messed up monetary policy. And I cannot keep reiterating this over and over and over. I talked about this, I don't know, on probably 50 videos already that I put out. And I'm going to talk about it until people listen. So, but I'm here to teach and educate and inform, and hope you got something out of this segment. So the quite opposite is happening in China. The Chinese economy is in shambles. They are, well, technically they're not in a recession, but their bond market is doing completely the opposite of what our bond market is doing. 180 degrees, okay? Completely opposite. Our bond market is raising rates, saying that inflation is coming back. The Chinese bond market is collapsing. When I say collapsing, the rates are collapsing, okay? And when bond markets price rates, interest rates, in such a manner that tells you where the economy is going to be 6 months ahead, that is something all of you need to watch, okay? Bond markets know best. Some of you may disagree, but in my past 30 years, I listened to the bond market. Bond market's larger than any market out there. And the bond vigilantes out there who hate inflation are pricing bonds correctly. In history, they have done it so, and it's worth paying attention to. You can't just go swing zero DTE options and then say, I'm fine. Well, that's a different story. But if you look at the macro picture in China, it is in shambles. Their real estate market is in shambles. It has been in shambles. Their manufacturing is slowing down. Well, now we have something else going against. It's another headwind. What is that? Trump talking about tariffs. Well, if China doesn't sell to us, their economy collapses, period. Because we have outsourced every single bit of manufacturing that we have in this country to overseas places, okay? China being the main one. So Chinese economy is in shambles. Every part of the Chinese economy, from their finance sector to their real estate sector to exporting, especially if the tariffs kick in. So therefore, the Chinese bond market is doing something completely opposite of what we're doing here, what our bond market is doing. If you guys can recall the chart that I showed previously, our bond market is raising rates. In fact, they have raised the rates by 100 basis points while the Fed is cutting the rates. Well, this is the Chinese bond market. The Chinese bond market, from 265, we are at 173. So China is facing the exact opposite situation as in the US. Their 10-year yield has collapsed nearly 100 basis points in 2024. And they're trying to stimulate. So FYI, Chinese debt to GDP is about 330%. Ours is at 130%, okay? But the Chinese bond market is saying the economy is definitely going to go in a recession, if not something worse. If the tariffs kick in, it may be worse, actually. And that's what the bond markets do. The bond markets don't take prisoners. They just take them in the back and shoot them. And China is nearing a recession. I think the Kobeissi letter is being very kind when it comes to the Chinese economy. I think they are in a recession. That's what the bond market's pricing, definitely pricing in a recession. I mean, look at this. right? Look at this trend. When the trend is your friend, when rates are collapsing like that, right, that means the economy is in shambles, and that's what the bond market is seeing, and that's what the bond market is expecting: massive amounts of stimulus in China, and China has started it already. China is cutting rates, like we are. So the dilemma is the Chinese economy in a recession? And if the tariffs kick in, so I think there's going to be a lot of saber rattling coming up in January after Trump gets in the office. He's talking a big game, right? He's talking about tariffs to Canada, to Mexico, China. If we don't buy from China, who else is, right? There is some manufacturing happening around the globe, but we depend on Chinese goods. Well, that's the other thing that I'm seeing, that if the tariffs do kick in and exports become nil, basically, they will not buy from us because they will put tariffs on us as well. We're having a trade war, right? Not that we sell too much to China anyway, because our trade deficit with China stands about $650 billion a year at the moment. So if we have a trade war, who's going to get hurt, right? Well, Chinese economy is definitely going to get hurt, without a question. Well, the other party that's going to get hurt tremendously, as far as I'm concerned, is going to be the U.S. consumer, because we depend on cheap Chinese goods. When I say cheap, they're not as cheap as they used to be, but what it is that at least they can keep the inflation under control in this country. Well, if we put tariffs on, everything that we import is going to become more expensive. Well, when things become more expensive, what do corporations going to do, you guys think? What do they think? They're going to raise the goods. They're going to raise the prices. And raising prices is what? It's called inflation. And that's what our bond market is seeing, and raising rates. So hopefully I'm trying to make some sense out of all this for you all. And the important thing is to understand these macro pictures, right? And at some point, the stock markets are going to pay attention to it. It's not going to be all-time high after all-time high after all-time high. They are going to pay attention to all of this. And today, it seems like the markets are paying attention to what's happening to the bond market, 10-year note here, especially, and as well in China. So as we know, over the past 2 years, market's up what? How much is the market up? It's up about 50%, up 25% last year, up about 28% this year so far. Amazing 2 years in the indexes. So if you did ETF, DCA, meaning dollar cost average, into any ETF, well, specifically not the small caps, but large caps, such as NASDAQ 100 or SPY, you're up 50% last 2 years. Now, you would expect most retail accounts to be up 50%. You will expect most retail accounts to keep pace with the indexes. Well, have they? Doesn't look like it. Why is that? Well, that's because a lot of people, a lot of retail tries to time the market. My mentors from 30 years ago, I remember every single little tidbit that they gave me, and then it's ingrained in my soul. Okay. One of the things one of them said was, Sergio, for the average investor, not us, not traders, but for the average investor, okay, time spent in the market is a lot more valuable than time spent trying to time the market. Well, it seems like a lot of retail tries to time the market. They try to buy the lows, they try to sell the highs. They get shaken out with what happened, let's say, in August, right, with the Japan carry trade debacle. Timing the market is very difficult. It's not for everyone. If you can do it, all power to you. You can beat the benchmarks. But the benchmarks have done so well, why even mess with it? Even if you time the market correctly, what is wrong with 25%, 25, 28% consecutive 2 years? There's nothing wrong with that. Well, there's a new study that came out, and that clearly shows the average retail investor is up just 9.8% year to date, while the S&P 500 is up 26.6%. They're lagging. They're way behind. And that's because, they want to get rich quick, and then they want to deal with options. And also during the August massive sell-off, we know what happened then, right? As many individual investors sold their best performing assets during the August pullback, including Nvidia and Tesla. This is a big study done by JP Morgan, so I take their word for it. So this year's retail performance is the second weakest out of any year where the index recorded a positive return since 2015, people. So stop trying to time the market. Let the pros do that if they can. And even the best pros can't do that either. It can't beat the benchmarks. And that's why passive investing is in fashion. That's why everybody is pouring money into ETFs, because at some point you have to understand that, you may think you're good. You may think you're going to beat the benchmarks by 2 or 3 or 4x. Some people do, but very few, a handful, right? So retail investors are also on track for their 4th straight year of underperformance. So when there's this chart on the right, you guys can see there's black bars and there's blue bars. Okay, black bars is what the retail is doing, and blue bars is what the ETFs are doing, specifically S&P 500. Okay, look at 2015. Look at every year. Look at every single year. Okay, down years, up years. Okay, down years and up years. Retail is the black bar, by the way, right? On down years, retail is doing much, much worse than the indexes. Okay, as you guys can see here, right here, right here, and right here. Look at the size of this bar. On down years, the S&P 500 in 2022, as we know, was down 20%. Retail was down close to 60%, retail average account. And on up years, when everybody is trying to outpace the indexes, they're not doing well. Okay, they're kind of keeping pace with it. The only year that the retail has beaten the indexes was in 2020. And when was that? That's when the government printed 7 trillion, sent everybody money, and then everybody sat in front of their Robinhood accounts and flipped options and made money. But outside that, retail is completely lagging the indexes. And that comes from being what? A lot of people like gambling, and a lot of people think they are going to, outgain the benchmarks. I mean, I try it, right? And then, in fact, at the end of this year, probably first week of the year, before I start trading again, I will share my final results, my actual account. I'll show it to you guys with full transparency. I had a good year. I'm not going to lie. I'm trying to keep my powder dry, although it's getting a little nerve-wracking today with what I'm doing with MicroStrategy, which I'll talk about shortly, and its ETFs. But look, that's the plan. I have a plan. I'm going to execute the plan, and I feel comfortable with it until I don't feel comfortable with it. But so retail is lagging. The retail cannot beat the benchmark. So please, just listen. Take my advice. Time spent in the market is a lot more valuable to you than time spent trying to time the market. Timing the market is very, very difficult. Over long periods of time, dollar cost averaging, steadily investing into an ETF, passive investing, is going to get you to the financial freedom that you deserve. It's not going to be anything else. It's not going to be swinging zero DTE options that I'm going to talk about shortly, which is creating massive problems for society, actually. But on a upbeat note, the whole world is investing in the U.S. Okay, our economy, with its problems, is still the best economy in the globe. No ifs and buts about it. And we can tell by what's happening to retail investors, to global investors pouring money into the U.S. And the reason they're pouring money into the U.S. is the belief that the U.S. economy, out of all the economies around the globe, is the best managed economy. You have debate about that. We can have a fair debate about that. Is it? Is our fiscal policy in order? Is our monetary policy in order? I don't think so, but you can't argue with what the markets have done over the last 2 years, right? And over the history. I mean, look at a 50, 80, 100-year chart of the S&P 500. What has it done? Nothing but new highs. Yes, it had its hiccups. Yes, it had the 2000 dot-com bubble, 2008 financial crisis, GFC, right? We had the pandemic. That's a black swan event. Nobody was expecting that. But overall, if you just steadily invested and passive invested, you have done nothing but wonders. And the global investors, including the U.S. investors, pension plans, hedge funds, individuals, agree to it. And the money is pouring in. And except that there are warning signs out there. And the warning signs, could be ignored until they cannot be ignored. Okay. One of the major warning signs is the concentration or the breadth of the market. For the past 2 to 3 weeks, I've been closely watching the advanced decline line. While the individual indexes, such as the S&P 500 and the triple Qs, were making new highs, the advanced decline line is tanking, is reversing, meaning more than average number of stocks, for example, in the S&P 500 are going down than up while the market's going up. That means the generals are in the front lines. Okay, the soldiers are not there. The generals are leading the charge. Well, when the generals lead the charge and the generals get shot, what happens? That's the best analogy I can come up with. So the US stock market is becoming even more concentrated. The top 10 stocks, think about this, now reflect a record 40% of the S&P's market cap. Think about this. There is 500 stocks in the S&P 500. 10 stocks are pushing this train. 10. What are the rest doing? They're not doing that well. And if you look at the Russell 2000 broader indexes, they're doing much worse. Now, this percentage exceeds the 2000 dot-com bubble by 14 percentage points. So here it is. I'm circling with my cursor. This is the 2000 dot-com bubble. The concentration of top 10 stocks was at 26.5%, 27%. We just hit 40%. Here's the oval. Take a look at it on the right side. And in 2024, these stocks have added, just these top 10 stocks in the S&P 500, added over $7 trillion in market cap and are now worth $21 trillion. Okay. To put this in perspective, the entire European stock market is worth 16 trillion. We're talking the entire European stock market, Germany, England, and all the industrialized countries, right? And the market's rally is not broadening. And that's concerning to me. That really is concerning to me. And I've been watching the advanced decline line for the past month. Actually, advanced decline line is kind of foretelling a little bit more trouble. And so what happens when these 10 generals that I call them, and we all know, which ones they are, the 10 generals are leading the charge. Is it a good thing? It's not. But I could have said the same thing looking at that chart 6 months ago, right? The concentration of top 10 stocks was, above the 2000 dot-com bubble. They were 30%, 35%. Now we're at 40%, right? At some point, the generals will be shot, or, nothing to see here, continue as it is. But when the corrections do come, they're going to be more violent because we are so concentrated. And what happens is that because everybody else, all the other stocks in the S&P 500 are not doing well, to raise liquidity, to raise cash, when there is redemptions in mutual funds and hedge funds, what do they sell? They're going to turn into selling the most liquid stocks, which are those top 10 stocks. So, we'll see. Time will tell. I will just trade what's in front of me. I'm not going to argue with the market. If the market's making all-time high after all-time high with a few hiccups in between, look, buy the dip has been the thing to do for the past 2 years, every single one, right? And you would have done amazingly well if you bought the dip, and it seems like it's going to continue that way. But so buying the dip doesn't come without any trouble, though. So I want to set this up a little bit going back to the pandemic days. Okay. When the pandemic hit, we all were cooped up in our homes, no work, mostly working out of the house, right? Economy shut down. What did the Fed do? Fed printed $7 trillion and sent it to people. In fact, I just read something that the IRS is sending out $1,400 checks to a million more people because they didn't take their money from the pandemic days looking at their 2020, 2021 tax returns. I'm going like, if we're going to control this thing, I don't think anybody needs, well, maybe some people do. I don't know. I don't need, if they send it to me, I don't know. I hope not. But a million people are going to get $1,400 checks because they didn't get their $1,400 during the pandemic. I'm going like, okay. I guess it's Christmas. I guess it's okay. But so if you do get it, let me know. Email me, Sergio@sergioavating.com. So what happened during the pandemic, right? A couple things happened during the pandemic. Obviously, we were stuck at home, but the government saved the economy by printing $7 trillion and pumping it into the economy, basically sending everybody checks to sit home. Unemployment got extended. Well, a lot of people took this money, did some good, right? They reduced their debt. I talked about that, consumer debt going down actually during the pandemic because people took their money and then paid off their credit cards, paid off some of their mortgages, paid off some of the car loans. But more importantly, what happened? Robinhood came around, okay? Coinbase came around. And the democratization of the stock market happened, right? So all these apps on your phone, you could just flip up, flip down, and then trade options. Some people did well. We remember what happened to GameStop during that, meme stock craze. But then now it seems like that's back with what's happening with the quantum computing stocks over the last few days or few weeks, actually, which I'll talk about shortly. Looking at the watch list. But there was an article that I read, which I completely agree with. And what did that create? That created a lot of people sitting home and trying to make money, right? Not knowing what they're getting into, specifically when option trading is so prevalent these days, right? Especially with short expirations, right? Weekly expirations, daily expirations on the indexes, zero DTEs. Well, what did that create? The article is talking justifiably so, that more men now are addicted to crack cocaine of the stock market. What is the crack cocaine of the stock market, people? Zero DTEs are the crack cocaine of the stock market. And this is very troublesome, by the way. There is another article that came out that there is a group called Gamblers Anonymous, just like Alcoholics Anonymous, right? And they are getting more phone calls and more requests from addicted people who cannot get off this gambling addiction because it is pure gambling. Now, some of you may say, Sergio, I can buy an option at 8 cents, like today, let's say. I can buy an option at 8 cents. It goes to $1 the same day. I can make a fortune. Yeah, but 99 out of 100 times, those options expire worthless. And, if you keep getting lucky, great. All power to you. But this is not something you can make a living with, okay? Buying zero DTE options and then hoping for the best, because nobody knows the direction of what's going to happen. So the Gamblers Anonymous meetings are filling up with people hooked on trading and betting. Well, we've become a gambler society, and the pandemic has a lot to do with it. Obviously, it created a lot of people who just sat on their phones or their computer screens and just bought and sold these options. And Wall Street is happy to provide, happy to oblige. More product after more product, shorter durations, zero DTEs, indexes down to individual stocks, right? Weekly options. I mean, you can swing options any way you like, and we can see on the next couple of charts, you guys will see what I'm talking about. According to the Wall Street Journal, the surge in these trades, boom and bust bets, which are the zero DTs that expire in just hours or days, is at the heart of the rise in compulsive gambling in financial markets. The Wall Street Journal interviewed more than 30 individuals who said they struggled with the irresistible urge to bet in financial markets such as options, crypto, or stocks. Many of them said they found short-dated options especially addictive. These trades can provide instantaneous returns or giant losses within minutes or even seconds. A jackpot always seems one click away, leading traders to keep going back for more. Well, it is happening, people. It is creating addiction. And look at this, okay? Look at the right side, right-hand screenshot. Look at what's happened to average volumes. Look at the circle. Average daily volume now is 55 million contracts. 55 million contracts of options. As you know, each option contract equals 100 shares. Multiply that by 100 shares. And the risk appetite is still skyrocketing. This is another warning sign that you guys need to watch out for, right? It's called equity put call ratio, index put call ratio. You guys need to pay attention to those things. And there are now a record 48 million option contracts traded per day. Well, that was like a week older article. Now we're at 55 million contracts. This volume has tripled over the last 7 years and now has surpassed 22 and 23 record of 44 million. Zero DTE options now reflect 50% of the total volume. Okay. And it's incredible, right? What is happening is incredible. And is the Wall Street Journal correct when they say, zero DTEs, weekly options, all these short dated options are creating an addiction? They are, without a question. But to me, as a premium seller, I enjoy those, right? I mean, there's a taker and there's a maker on these options. The taker is the directional bets these people place, and they buy an option at 5 cents thinking it's going to go to 50 cents. Once in a moon, like today, when you have big, massive moves, it happens. But in 99 out of 100 times, that option is going to expire worthless. It's going to send you to the poorhouse. And when that happens, what happens? Depression kicks in, right? Sleepless nights kick in because most people cannot manage the 3 Ps that I'm going to talk about shortly. And all these things, are they good for society? Are they good for humanity? I'm not sure. But Wall Street will provide you with the crack. If you want to go swing him, knock yourself out. For each, person that posts on YouTube or on X or any social media that talks about, "Oh, I made $1 million today." This is not a zero-sum game, people. When somebody's making $1 million, somebody's losing $1 million. This is definitely not a zero-sum game. And, some people can manage it and some people cannot. But to me, the most important thing here to understand is addiction of any kind is not a good thing, right? And if you are addicted, please go get help because it will ruin your financial, not only you ruin your finances, it will ruin your relationships, okay? Managing this trading thing is a very difficult thing, especially emotionally. And if it's bothering you, if you're waking up in the middle of the night, having anxiety attacks, that means either your position size is not correct, your directional bets are not correct, you've had too many losers, you're chasing, you're revenge trading, all these things that I've talked about in the past. Take advice from me. This is not a healthy thing to do. You may get lucky here and there, but ultimately you're going to lose. And 95% of people who trade these short-term, short-dated options lose. And, nobody likes losing. And when you start losing, not only your bank account gets hurt, but your finances get hurt. And you may not be able to make your car payment, your mortgage payment, especially if you're gambling with the money that you need. And first of all, never, ever, ever gamble with the right money, right? But that's what we got used to doing because government was pumping money, sending checks to everyone every month, and people were just pumping into the market. And rug pulls are there, like today, right? If you bought every dip today, you're getting smashed. All those zero DTs are going to expire worthless, and you're going to be more depressed, and and you're going to be poor. So, to me, have a strategy. You don't need to be in the market every day, but these zero DTs are absolutely, definitely wiping people out, and justifiably so. It's the crack cocaine of Wall Street. So, I talk about Saylor, MicroStrategy, the 2X ETFs. a lot on this channel because it is fascinating to me that in 2024, almost going into 2025, Michael Saylor has figured out the infinite money glitch. And I've done many videos about explaining it to you all. Please go check them out. I'm not going to get into detail, but last week Michael Saylor decided, I don't think I'm going hard at this. MicroStrategy holds 440,000 Bitcoin. They bought another 5,000 15,000 or 5,000 Bitcoin. I don't know. So the way he's doing this is he announced it on the last earnings call. He had two-pronged attack. He was going to issue $21 billion worth of stock at the market sales, meaning ATM sales. Those are equity sales, which is dilutive. It dilutes the existing shareholders. And he's almost 75% done with the ATM sales. This plan was a 3-year plan, by the way, so he's going to be done like in 3 months. But then he's holding his powder dry for 2025 in convertible debt issuance. And I did an amazing video explaining the convertible debt situation, how it's getting played out. Institutions are lending Michael Saylor money at 0 interest rates, and he's going and plopping it into Bitcoin. So he called that a 21-21 plan, 21 billion in ATMs and 21 billion in convertible bonds. And we know what happened to MicroStrategy. We know what happened to MNAV that I've done multiple videos about. Go check them. MNAV is the multiplier on net asset value, right? Their Bitcoin holdings plus enterprise value compared to outstanding shares times or multiplied by the existing or current stock price. It's pretty clear what's happening to MNAV. MNAV is shrinking because Bitcoin actually hasn't done much. It's just stayed about between 95 and 100,000 for the last month and a half now, right? What has MicroStrategy has done, right? Hit 540, now we're at 330, and we almost hit 300 last week. So that MNAV is getting shrunk, right? So Wall Street, there is no free meal on Wall Street. That's what I talked about. But now Michael Saylor says, okay, I had enough with this nickel and dime stuff. Now, MicroStrategy called a special shareholder meeting to fund more Bitcoin purchases. All right, you guys are all sitting down? MicroStrategy submitted a proxy filing with the SEC seeking shareholder approval to boost its Bitcoin 21-21 plan. That's the plan that I just talked about. According to a December 23 proxy filing with the United States Securities and Exchange Commission, the company is seeking, are you guys holding on to your seats? Is seeking permission to increase the number of authorized shares for both Class A common stock and preferred stock, giving it more flexibility, I will call it firepower, to issue additional shares as needed. This is where my jaw dropped to the floor. At the moment, MicroStrategy has 330 million authorization to issue 330 million shares, and they are up to 242 million shares already. So that means MicroStrategy, let's say, cannot issue another 10-for-1 split. You can't do it. So splits do count into share count, by the way. So the First Amendment seeks to raise the authorized Class A common stock from 330 million shares to 10.33 billion shares, not dollars worth, people, billion shares. While the Second Amendment aims to increase the authorized preferred stock, which they have now at 5 million shares, to over 1 billion shares with a B. Okay, you guys are, on the floor yet? So MicroStrategy's Michael Saylor wants to issue 10.3 billion shares. Authorization doesn't mean he's going to sell it. That's why all the bears came out and said, this is ridiculously dilutive. This is a Ponzi scheme. He's going to run this company into the ground. He's trying to front run the government. I did videos about all this. Look, it's his company, as he has a board of directors. He's not doing this on his own by himself. Okay, he's putting it in front of the board of directors. The board of directors are making a decision that yes, this is the proper thing to do. Oh, by the way, he's really putting some ridiculously high quality people in that board of directors, and those people need to get compensated, and this is through stock shares. But let's say MicroStrategy wants to do another 10-for-1 split, just like they did a couple of months ago. Well, to do a 10-for-1 split, right, the shares have to go at the moment from 242 million shares, right? It's got to go to 2.4 billion shares. Well, in order to do that, you need authorization, right? Now, I'm not saying he's going to do a split. I'm not saying that at all. But what I'm saying is that 10.33 billion shares at today's valuation, we're talking the most valuable company on the planet, right? Again, none of this means that all those 10.33 billion shares are going to come to market. He is positioning himself to buy Bitcoin literally every weekend, right? And I don't know what else to call this. That's why I call this today's, Power Hour. Michael Saylor is all in. He's all in. Is there any other way to put this? And what's going to happen is that he may be also looking down the road to issue those convertibles. If those get converted, he needs more shares. The company has to issue shares to the convertible debt holders as well. So the preferred thing is a little interesting, right? It goes from 5 million shares to 1 billion shares. I have my thoughts about it. So Michael Saylor, through MicroStrategy, is a proxy for Bitcoin for institutions who cannot invest in Bitcoin. If you're a bond fund, trillion or $100 billion bond fund, you're the one lending Michael Saylor the money because you're investing in a bond. Okay. So certain bond funds, according to their charter, they cannot, buy Bitcoin. If you want to participate in Bitcoin, Michael Saylor is becoming a conduit for you to participate in the Bitcoin market. Just like when MicroStrategy was admitted to the NASDAQ 100, and now every $100 you put into the triple Qs, you're buying 47 cents worth of MicroStrategy, because MicroStrategy is in the triple Qs now, and you automatically are investing into Bitcoin. Like it or not, that's what's happening. So there are a lot of companies who can only do preferred stocks. Well, there is not enough stocks for Michael Saylor to issue. For 5 million is nothing. So he's raising the authorization on those to 1 billion shares. So he's trying to become the supermarket for all these other institutions who want to participate in the Bitcoin market, but they cannot, because their corporate charter or their charter basically won't allow them to buy common equity. It only allows them to buy bonds. It only allows them to buy corporate bonds. It only allows them to convertible bonds. It only allows them to buy preferred stocks. Will there be a dividend? Most preferred stocks come with the decent dividend. Will there be a dividend? Is Michael Saylor going to create other products off the Bitcoin that he's holding? Because there is a lot of talk that a lot of new products are going to come around, such as Bitcoin-backed mortgages and Bitcoin-backed corporate bonds. So I think this game is just beginning. It's a fascinating game. I'm glad I'm alive. I'm glad I have my brains still together to make sense out of it and try to explain this to you all. But I think this he's all in. There's no ifs, there's no buts, and there's nothing else to say. And I will not trade Bitcoin. Although I started DCAing Bitcoin every week now. I'm not doing much. I'm doing like $100 a week, couple $100 a week here and there. I have Bitcoin. It's up to 12% of my asset value, because it used to be 2%, 3%, but because the price has gone up so much, now it's up to 12%. Not that I added to it last 5-6 years, but now I'm going like, okay, I'll just DCA a little bit more into it, and I will not trade Bitcoin. I will buy Bitcoin. I will take it off the exchange, put it in my wallet. I will trade, however, the Bitcoin proxies. I will trade MicroStrategy. I will trade the 2x ETFs. I will look into those to trade for sure. And I have been doing it. And if you guys checking the position screens every Monday, Wednesday, Friday, you'll see it. So good luck to Michael Saylor. I'm not married to any of this. Other than that, I'm married to Bitcoin. I'm not going to look at any altcoins. I'm not going to look at anything else. And Bitcoin is to buy and hold, not to trade. All the other ones, game on. You guys, if you follow me at your own risk. This is not trading or financial advice. So I talk a lot about my mentors from the past, right? I had wonderful, wonderful mentors. And a lot of the things they have said stuck with me. So this is going to be the segment that I give you guys a heart-to-heart conversation. I just talked about the gambling part of Wall Street, how it become a casino, basically. 20 years ago, 30 years ago, if you told me, Sergio, isn't this like gambling anyway? I would have slapped you, because I went to school for it. I put my years into it. I'm like, no, there is analysis, and there is fundamental analysis, technical analysis. There is, you need to look at the macro economy, micro, all this stuff. I would have said all that. Today, if you ask me that, I will shake your hand and I go, I agree. We're gambling. Now, even in gambling, you have to have rules, okay? My number one rule that I have always done or listened last 30 years plus is the 3 Ps, okay? What are the 3 Ps? The 3 Ps were relevant in a book written in 1923, okay? I didn't take it from there. My mentor told me that. He may have taken it from there, but it stuck with me. The 3 Ps. First P, patience. You got to have patience. You can't be in and out. You can't change your mind every 30 seconds. You can't be a hummingbird going flower to flower. Pick yourself 10 stocks. Get used to the movements. Get used to their implied volatilities. If you're going to trade derivatives, get used to them. Because certain stocks behave certain ways. There's no ifs and buts about it. It's almost like a girlfriend, okay? You don't need to be in 10,000 stocks. All these people on YouTube and stuff, they go like, oh, AI, AI systems are picking me all these winners and I don't have to do anything. I'm like, BS. None of that is happening. However, so the 3 Ps are patience, position, and planning. You may have patience, but if you take oversized risks, you're going to blow accounts without a question. So positioning is also as important. All these 3 Ps are equally important. Patience is important because you need to pick your battles. Patience comes this way. This is the best analogy I thought about, before the show. I'm a lion, right? I'm waiting in the bushes. I see a rabbit. What do? I'm a 400-pound lion. Am I going to go after a 5-pound rabbit? Chase it? Maybe quicker than me. I'm hungry. I got to eat. Well, what am I going to do? Am I going to go chase a rabbit, or am I going to go chase a squirrel? Am I going to go chase a hog? No, I'm going to sit hungry until a deer or a zebra or a gazelle walks by me. Then I'm going to put everything I have, whatever I have left in my tank, because I'm hungry. I want to eat. I'm going to go chase that thing to death. And now I'm going to eat for a month, and I'm going to feed my clan for a month. That's the best analogy I can come up with. So patient comes like that. You have to be patient, like a lion in the woods or in the bushes. You can't go chase every rabbit. And that's what zero DTE guys do. That's what day traders do. Chase rabbit and squirrel after rabbit and squirrel. I'm going like, no. Or a hummingbird, flower after flower. This flower nectar, that flower's nectar. You're going to get nailed. You're going to get blow accounts. So I haven't read this book, but I came across this on Twitter. And this is from a book called Reminiscences of a Stock Operator, which is based on Jesse Livermore, who probably in the 20s, 30s, before the crash, was probably the best trader on Wall Street. And in those days, we know there is no decimalization. We know there is no electronics, right? So, the book is highlighted and underlined. So for you all who cannot see that, the left screen is clearly indicates what I have been practicing for, 30 plus years after my mentor told me about the 3 Ps. Now, he didn't put it this way, but I found this and I want to share this with the audience and whoever's watching now and later. So there is no one size fits all. It takes time and experimentation with real money to find a plan that works for you, right? How many times have I said, I don't like paper trading. Paper trading is playing like a video game. You get killed. What do? You push reset, you start again. There is no downside. At some point, you don't have to do it with 5-digit, 8-digit accounts. You can do it with $500, $200. If you position size correctly, You have fractional shares these days in everything, right? You got to get in the race. You got to put the real money in there, because when you do put the real money in there, emotions get involved. Okay? You must understand that. But the excerpts from Livermore, here they are, the underlying parts of it, 4 parts. Let's see how relevant or how much they correlate with my 3 Ps. It was never my thinking that made the big money for me. It was always my sitting. Which P is that, people? Which P is that? Isn't that patience? Just like the line in the bushes. I think I can think of 100 trades a minute, but then I don't take 99 of them. Why? Because I'm sitting on my hands. I'm waiting. I'm waiting for the best setup that I can have. I have had success with in the past 30 years. Do they come around every single minute like day traders? No. They come around maybe once a week, maybe once a month, but I don't mind. I want to catch me a juicy, big old gazelle as opposed to a zebra. As opposed to a squirrel, right? Men who can both be right and sit tight are uncommon. That goes also with the P, right? Men who can be right and sit tight are uncommon. Well, what does that say? That's the trend is your friend. Think about it. If you're right and sit tight and let the winners run, that's where a lot of people fail. What they do is they take small profits and they let the losers go. And that's why they blow accounts out. So this book was written in 1923. No joke. Okay? You can get it on Amazon, actually. It's called Reminiscences of a Stock Operator. Number 3 excerpt. The market does not beat them, they beat themselves. Hallelujah. Market doesn't give a rat's ass who you are, what you're trading with, how much money you have, what you know, what your education is. Market doesn't give a rat's ass. What you do, though, is you position sizing correctly. You revenge trade. You're addicted to gambling. You have to trade 10 times a day. Well, you're beating yourself. You're going to beat yourself. There is no ifs and buts about it. So, patience, right? And this goes with position. You got to obviously position correctly, but if you're position sizing up because you had a few losers, you're going to blow account after account after account, because now you're revenge trading. You're angry trading. Turn the damn thing off. Walk away. Come back in a week. Cool off, right? And last but not least, disregarding the big swing. Again, follow a trend. Go with the trend. How many times, how many stocks have I talked about in the past 5 months of the existing of this channel that you guys have seen a trend, right? Find a trend, disregarding the big swing. That's the trend. And trying to jump in and out was fatal to me. Well, there you go. Because if you can buy a stock at 5, ride it to 25, you can day trade that from 5 to 25 a million times, and most likely you're going to end up losing money. So, 3 Ps, people. Patience, position, and planning. Patience is a virtue. You learn over time. That's why when people ask me, oh, you don't trade that much, I'm like, I don't have to. If I'm convinced of a good setup, I am going to trade it. I'm not going to miss it, but I'm going to wait, right? What did I miss over the last 2 weeks? All these quantum computing stocks going from 2 to 30, 40, 50. Great. If you did it, all power to you. I'm not a chaser. I'm happy with making 200%. And if you're not happy with that, it's okay. Which I will share my numbers actually the first week of January. Number 2, position. You have to position correctly. Your sizing, it has to be correct. Your risk management has to be correct. That goes hand in hand. Position sizing. If you have a $5,000 account, you can't put all of it in 0 DTE and hope it's going to go to $5 million in a month. Not going to happen. You're going to blow it. And number 3 is plan. Have a plan. What is your plan? Are you a swing trader? Are you a day trader? What are you? First, find who you are. Once you find who you are, then you can create some setups for you that work for you in the past. and then minimize them down to maybe 2 setups, max 3. And if you see it, if you're a technical trader, if you see it on a chart, get on with it. Get on with the program. But nothing to me says more than this, that whatever was relevant in 1923 is relevant almost going into 2025, 100 years later. Because these are my best advice. Again, not trading or financial advice, but advice from what I've learned over the last 35 years. And I know one thing very well. You cannot buy or read or learn experience. You got to get your car in the race, as small as it may be. You're going to go hit walls. You're going to go hit every other car in the race until you get to be a better racer. Because this is not a zero-sum game. This is not a video game. This requires patience, takes years to master it, and there is no mastering it. I haven't mastered it. I'm still learning. I'm open to learn. And position size and planning. Once you do all those 3, calm the heck down, you'll be all right. And last but not least, okay, I want to finish this in the next 5-6 minutes, and then I'll answer do some Q&A, share the position screen. Last but not least, my son is first year of high school. My daughter is third year of college. When my son was in elementary school, going into middle school, and same thing with my daughter. I've been in the same house. This is my backyard for the last 21 years. I'm going to almost 22 years now. Raised the kids here. They were born here. They went to great local public schools here. We have amazing public schools, charter schools. Place called Granada Hills in California. Over the last, 10 years or so, we are teaching kids everything at middle school now, even at elementary school. What are we teaching kids? We're teaching kids about gender. We're teaching kids about sex. We're teaching kids about anatomy, which is fine. I mean, I think a parent should do the birds and bees talk with their kids as opposed to be a teacher, because, they may be biased one way or another. We're talking about a lot of issues that I don't think belong at schools. Now, you may call me old world, you may call me politically incorrect or whatever. Now, knock yourselves out. What should we teach our kids at these early stages of their life? We can teach all that stuff. I get it. I'm opposed to it, but it's the public school system. If you're not happy with it, then take your kid out and put him in a Christian school. Somebody said to me, that's $30,000 a year, and your education is not half as good as my public school, though. But let's not get into that. What's lacking in our schools, that goes, by the way, starts at elementary school, goes all the way to college. In fact, the college is more prevalent. What do they not teach our kids? They don't teach our kids about investing, early investing. They don't teach our kids about finance. Why? Because they want to create a dependent society. Who are they, by the way? When you say they, people go, Serge, who's they? They is the banks. Banks want to issue you credit as soon as you can breathe, so that you get hooked on plastic and you go spend money, because our economy's 80% of GDP depends on consumer spending. They want you to spend money. We're a spender society. We're not a maker society. We used to be a manufacturing society. We're a spender society. So why are you guys teaching kids, in the education system, all about gender and different genders and sex education and all that stuff? Yeah, it has its place. I get it. Is it too early in elementary school and early middle school? Yeah, I think it's early. But they're doing it. Well, why don't the powers to be create these classes for kids to learn about finance? And I'm not talking high finance. I'm talking about trade. We're talking about how you can make money buying something at $1 and selling it at $1.50. ROI, percentages, right? This should be part of math curriculum, I think. I really do. But I came across this tweet on Twitter, and this I cannot go by without mentioning it. And my son is into it, by the way. He's 15. Both my kids have DCA accounts already. Okay. And my daughter is working at school already. She's a, student instructor. They're paying her to teach older kids actually, and then she takes her paycheck, and certain weeks she spends it obviously because she's a spender. But on certain weeks when she can do it, I'll help her and put the $100 in, because I've said this a million times. You put $100 a month for the next 40 years, and she's at 19, and my son is 15. For the next 40 years, you put $100 a month into any index ETF, anything, outside your income, outside your 401k, outside your IRA, outside your Roth IRA. You do that in 40 years, that's going to become $1.3 million. Why shouldn't they have an extra $1.3 million? That's with an average of 10% compounded return, dividends reinvested. But I'm thinking, I teach that to my kids. I didn't start early though, which is, again, my fault. But I came across this tweet that just blew my mind, okay? This is from a Twitter account called the Smile Investor. All right. My son came to me several months back and told me some of his friends were talking about Bitcoin. All right. He's 9 years old. Amazing. Amazing. He's been saving his money and decided that this was what he wants to do. Okay. Rather than telling him no, I take my hat off to you, sir, as a parent. Because a lot of parents will go, I don't know anything about Bitcoin. Go away now. I'm tired. I worked all day. I don't want to talk to you about this. I'm like, okay. You're too young to talk about money. Oh, you're not young to be taught about sex or gender, but you're too young to talk about money. Okay, I got you. Rather than telling him no, I told him he should first understand what he wants to invest in. He decided to learn about it together. Amazing. Amazing. I believed it was important to meet him where his interests were. Absolutely amazing. Definitely better than a video game on top of everything else. After learning about it, he tells me, Dad, I still want to buy some. I understand the risk. Now, you may say, what a 9-year-old going to understand? 9-year-old is not going to understand about what Michael Saylor is doing. But he has a conviction, and he has his whole 70 years of life ahead of him. Even if this turns out to be a mistake, the next one won't, okay? He scraped together around $150, and we bought him some Bitcoin. I also bought some after what I learned. Great. I'm proud of the little guy for showing interest and eagerness to learn about investing. This experience opened doors for us to discuss other investments such as VOO, which is the Vanguard ETF, Tesla. Now he wants to make investing part of his future, and he's planning on making his first purchase of VOO. And there's his Robinhood account, up 63% already. I guess he bought Bitcoin a while ago, probably at 50,000. Look, this is what brings joy to me, right? Because this should be it. We should all do this with our siblings, with our kids, with our grandkids. Just set them down. The world is not about this two-dimensional video game that they're stuck on, that they're getting carpal tunnel on, right? There is stuff happening that they should learn early. If you're going to learn early about sex, which I think it's definitely important, right? I mean, you don't want accidents happening. You definitely need to have that birds and bees talk with your kids, but why not investing? And look at what's happening in college. What is our college system based on? Student loans, billions and trillions in dollars. It's all about marketing, okay? Why should any college kid with a 4-year useless degree that most of the time they come out with like a shackle and a ball on their feet called a student loan that they're going to pay for the rest of their life almost, interest on, right? Well, if they were taught at 9, 10, like this kid, about investing, maybe by the time they get to college, because they may have had some funds that they don't have to borrow money to go to college, because I think that's the biggest travesty that I've seen in this country. The marketing of, yes, you must go to college. No, not everybody is college material. You shouldn't. It's overrated as far as I'm concerned. In my day, college was great. Today, college is completely overrated. And especially a 4-year degree. Especially a lot of these kids, they go like, oh, what are you studying? I'm studying marketing. What does that mean? What does that mean? Okay, I don't know. But without getting into that, my hat's off to this parent. My hat's off to this 9-year-old. Amazing. Do that with your kids. Have the talk be Bitcoin or Tesla or finance or stocks on your dinner table, as opposed to, oh, what can I buy today? Oh, Best Buy has a 70-inch TV sale for $400 or whatever. Fill their heads with all the stuff. It works. They're malleable. They don't have fixed ideas. They don't have preconceived ideas yet. You can direct them the right way, and I love it. I love these kind of tweets. I love these kind of families who take the time to talk to their kids about investing. So with that said, let's see who's here. Craig is here. Mojo is here. Techie B, Adele, good morning, good afternoon to you all. We Zoom, wise advice. Thank you, sir. We Zoom, we need to talk today before I go to my son's soccer tournament. Edward Lee, 5 million to 1 billion shares. Yeah. Yes. No, I have my ideas. I don't think it's straight gambling. I think he's trying to become a conduit to a lot of corporations who cannot buy Bitcoin. And if he does issue preferred stock, goes buy Bitcoin with them, it's almost like buying Bitcoin with their money for them. So there is a method to this madness. Okay. In my opinion, stock, yeah, well, Wall Street thinks so, and then we're creating a lot more gamblers, it looks like. School system is out of control if we don't have good parents. Yes, 100%, without a question. I agree. So let me remove this and let me add. Okay, here's my trading screen. Can you all see this yet? Or no? Yes? No? No? Yes? You know what? I'm going to go back. Because last time you guys weren't able to see this because I didn't click this. Now you guys should be able to see it. Can you guys see it? Yes. Okay, so this is my position screen. I have 14,000 shares of Werewolf Therapeutics, 154. Ooh, I'm gonna own 2,000 more shares of MSTU at 975. So I have 2,500 shares. I have 2,000 more shares that coming my way unless it closes above 10. I have sold 11 and a half puts, 11 puts, 10 and a half puts, and 10 puts. Now I have taken in premium obviously on all of these, but then it's pretty self-explanatory really. I have 60 January 100 root options. They're $1. I bought a call spread on Qubit. Qubit is quantum computing stock. Not much. I bought the 25-35 call spread for $1.05, and they are about 90 cents now, so not that big of a deal. I was long 30 puts of the S&P 500 index. January 595 puts. They got as high as 920. I sold them between 5.5 and 8. They're 7 now. So every time I'm buying puts, it seems like last time we had a swoon last Wednesday. I had puts as well, if you guys can recall. And then I bought some puts on Rigetti Computing. This stock was $1 stock. Today hit 18, 19. I bought some puts. I mean, this is just short-term trading. January, $15 puts, straight up puts on RGTI, Rigetti Computing. I think I will show some of these charts. They are in nosebleed section. They are out of control. And, when they are out of control, you need to be really, really, take the other side. I like taking the other side on some of these. I paid 20 puts for 270. They're super expensive. They're 240. As you guys know, I don't like buying things when their IV is ridiculously high. But when you guys see the chart on Rigetti, you guys will understand why I did what I did. It's ridiculous. It's just out of control. So I'm long 20 puts, balanced with the puts that I took the profits on, holding on to how it definitely looks like Bitcoin is selling off some more. Let me see where Bitcoin is at the moment. 94,300 down 1,385. 92.5 has been the low. It's just going between 92.5 and 98 or 100. If it takes out 92.5, yes, MSTU, which is the 2x ETF of MSTR, will go lower. But there's a plan, obviously. So I'm willing to hold on to 4,500 shares of MSTU with an average cost now. If I get put all the 2,000 shares, I'll be about 11.5 range. You're gonna say, well, yeah, 4,000 shares, you're down 1.5. That's $6,000. I'm like, yeah, but then I already sold the calls this week. I sold the calls last week. My cost basis is going down because the premium is ridiculously high on the call side as well. And on Monday, if I do get extra assigned, I'm automatically going to put the calls out again at 40, 50 cents and again and again. And Bitcoin will rally and this will rally. So my point is I'm going to try to turn this thing into an ATM machine, just like I did with MSTX about a month ago. And now I moved to MSTU because it's a $10 stock, because I had the 10-for-1 split. But at the end of the day, we'll see where it ends up. If it ends up at 10, then the 10s will expire worthless, and I will get assigned 11.5 minus the premium of 105, which will be at 10.5. The 10.5 puts I took in 50 cents, so that if I get assigned those, my cost basis will be 10. 11 puts I took in $1. My cost basis will be 10, literally where the stock is almost now. And I sold the 10 puts at 60 cents. On that one, my cost will be 9.40. Those, if the stock closes below 10, I will get assigned those as well. And yeah, that's where we are as far as the positions are concerned. And let's go look at the charts as we finish this segment. I'll put out a few charts, show you guys what's happening. This is Qubit. I mean, look at some of these, like these quantum stocks, right? Actually, let's go through those, a few of those, how ridiculous we are at the moment. That's another warning signal sign. When things go from like $1 to 27, stocks have like 10 million shares outstanding and it's trading 200 million shares. You guys got to be really, really careful with it. But let's start with the S&P 500. So S&P 500, I have two lines. There's a channel that we're inside of. We broke last Wednesday after the Fed cut the rates. We broke through the uptrend, bounced back about 50%, back to the trend line and rolling over today. Now, I don't know if this is the start of the next leg down, but we'll find out. MACD is going down. I mean, still in a reasonably okay uptrend, but we'll see where we are. These are the triple Qs. Above is 50, above is 20. Not much there. MACD has turned down. Volume is picking up on down days, though. That's what I'm noticing. We don't have to go through all the Mag 7s, but Apple, all-time high, just pulling back. Apple is a buy on the dip versus, let's say, an NVIDIA. NVIDIA is kind of, I mean, Mag 7 obviously still doing well. I talked about 10 of these stocks becoming 40%, 50% of the market. So most of the Mag 7 is doing well. Who's not doing well? Google was not doing well. Google is, after the quantum chip announcement, that's doing well. So let's go through some of these crazy quantum computing stocks, and then I'll answer some questions. ARQQ is one. Arkit Quantum, $5 number. Today's high 53. Key reversal day today. I am really paying attention again to the Chinese stocks again. With the stimulus coming, with the interest rates collapsing, I don't think Trump is going to put the tariffs on, or if he does, there's going to be some last second agreement. I'm watching BE. I like it. I'm going to, so Kava is that I sold in the 160s. Literally, I held this for 1 year and 4 months. It was in my long-term portfolio. We're getting close to the 200 EMA, which is about 105. We're at 114. I will start selling puts on that. Nothing has changed with the company. It just got a little overheated. I rode this from 32 to about 160. Highs 172. We're down to 114. I am going to pay taxes on this. Fine, no problem. I am happy to do so. Let's see. I'm just going to put some of these crazy moves out there so you guys can see how these day traders could be making a fortune. Actually, let's put out. Okay, so one is KULR. There, it's Cooler Technology. Look at this thing. 50 cents to 5.5 this morning, putting a reversal day in. They are doing what Michael Saylor is doing. They just bought $21 million worth of Bitcoin. I'm like, okay. Seal SQ, LAES, 50 cents to $11 this morning. I'm putting a reversal day in. You guys see this last bar right here? This bar right here. Okay, those don't happen in the middle. They either happen bottoms or tops. I'm thinking all these are topping out today. Lunar, big winner this year, really. Sean is in the chat. I know he bought it in the 8s. That's a double and a half, sir. If you do have it, I wouldn't mind you taking a profit. MicroStrategy breaking under its 50 EMA or just right at it. You can't trade MicroStrategy by too many technicals, really. It's 325. So let's look at the numbers of MicroStrategy. 242 million shares, okay, times 325. What is that? And then you look at enterprise value plus so 242 times 325 is $78.6 billion. That's the market cap. They have 440,000 Bitcoin at 95,000. That's 42 billion. So 72 billion divided by 42 billion is 1.71. If you take the enterprise value with their software that they're selling, which is not doing well, let's put in 5 billion or 8 billion, be generous value on it. So 72 billion divided by 50 billion is 144. This is where I want to buy MicroStrategy. That's why I sold the puts on MSTU. And this is MSTU. And we're down to 967. I'm pretty sure I'm going to get assigned all the 2,000 extra shares. And so this is MSTX. This is the other ETF. It's 62. I mean, this is going up 2x, going down 2x. So, painful is painful, but then, hey, you have to have a plan. So my plan is I get assigned. My cost, it'll be about 11.5 after, if I get assigned all those. But I sold 32-cent calls already. They're expiring today. That puts me to 11.10. I will immediately sell 11.5 calls for next week. Every week I'm going to put calls out. And just like I did with MSTX, I will get called away at some point. Not concerned. And here are some more crazy moves. I on Inc. 10 to 50. That's a trend for you guys. Okay. A lot of these eVTOL stocks did well, like Archer Communication and Joby Aviation. Those are the ones that the flying cars, right? EV cars. That's called eVTOLs. Tolls, I think, transport or something. I don't know what it is. Let's look at, so we looked at Cooler, LAES. Let's look at Lunar. We looked at MicroStrategy. We looked at, okay. Let's look at some more of these crazy ones. PDYN. It's called Paradigm AI Corp. How about them apples? Goes from 2 to 8, pulls back to 4, hits 14 today. They're swinging these stocks like pork bellies. When that happens, you got to be really careful about the marketplace. These are the dogs that are moving last. Some will be fine, some will not be. Some will be pump and dump, some will not be. This is QBTS. It's called D-Wave Quantum Computing. Although, you know, so the way I found all these was when Google announced the Willow chip, I did a search. You just do a Google search, you know, give me all the publicly traded quantum computing stocks, and it popped them all out. And your trade, man, you know. QUBT is right there. I mean, unbelievable. You know, buck to 27. All right. Okay. Red Cat Holdings, another crazy one. You know, these are uptrends though. You cannot disrespect the uptrend. Okay. I mean, will I buy on pullbacks? I'll be really, really careful with these to buy on pullbacks. Let's see. This one I like actually. This has potential. This it's called Sidus Space. Actually, they're sending on SpaceX in December, shortly actually, within a couple of days, they're sending their first satellite. You guys may be interested in this SIDU before it takes off. It looks pretty much like Lunar actually. SoundHound AI, another AI stock. I may buy puts on this. It's a little ridiculousness level. If you guys go back in like a power hour from, let's say, November, first week of November, second week of November, this was on my watch list, people. About $4.5, $5, $6. In fact, some of you bought it. I know you did. RGTI is the one I just bought puts on, and I will buy more puts. Look at this thing. Come on now, right? So I have more orders to buy puts. I have 20 of them. I'm buying the 15 puts. When something's 20 EMA is 8.5 and stock is trading at 20, 2.5x of its 20 EMA, and it's 50 EMA, it's 5, and stock is 24x of 50 EMA. Trees don't grow to the sky. You know, I can do this, don't do it. I've seen this movie a million times. These parabolic moves end very, very badly. Very badly. So you guys can, I'll put this position up today. You guys will see it on my position screen. It's in the community page, by the way. This is the big headache that I'm talking to you guys about. This is the TLT. This is the iShares 20+ year Treasury bond ETF. So this is exactly when the Fed, right here, I'm circling, when the Fed started cutting rates, and this is what the bond market reaction was. So bond market has raised the rates by 100 basis points, while the Fed has cut the rates by 100 basis points. So when the TLT is going down, that means interest rates are going up. When the TLT is going up, that means interest rates are going down. Real interest rates. We're not talking, you know, anything else. A couple of names I liked. They may be pulling back into little buy ranges. Right on top of the 50 EMA, Upstart 68 and Affirm. Some uptrends don't change. Affirm is nowhere near closest to its 50 EMA, but it is what it is. Another nosebleed stock is WiseKey. They do security software for quantum computers. Look, you can trade these. I mean, you know, if you have the stomach for it, because you just don't hold the bag though. And one last one that I kind of started following is called Xenatech. They do drones. This reminds me of Lunar, actually, when it was going the sideways between right here, this move right here, okay, after a gap up, which was the catalyst, which was the NASA contract. It's just going sideways. And then when it broke out, you guys know I traded the 10s, I traded the 15s, I traded a bunch of it right here in this leg up right here. Then they did a secondary, and I didn't think it would do this, but it did. But Xena looks pretty much like Lunar. They're in AI drones. I mean, they're hitting both the keywords, AI and drones. So this thing was like a $2 number, went from 2 to 12, sideways, sideways, sideways. We tested the high at 12, still going sideways. You just got to be patient with this. Volume is getting really just dying now. Definitely could be traded, no question about it. So let me answer some questions, and then I will say my goodbye. All right, so hopefully you guys saw that. School system is Edward Lee says no. I don't know. No to gambling, no to school system, no to good parents. And Mojotronic says no. Okay, yes, yes, yes. Okay, yes. Oh, that's for the screen. I got you. Okay, here's a question. Serge, may you please, absolutely. May you please explain that AI drone company from Canada that you mentioned during yesterday's live? Oh, yeah. That's the one I just showed, Xenatech, right? Is that the one? Yeah. It's just this trade, technical setup. I like charts like this that just shoot up, low volume, they go sideways, and next leg comes, and then next leg comes. But I'm putting my money where my mouth is. I put the positions up. Positions don't lie. Makers and losers. And it looks like I'm definitely getting put MSTU. We're down to 960. I'm going to get put 11 and a half, 11s, 10 and a halves, and 10s. I mean, the thing is 960 now. Okay. We'll have dry powder. No problem. Okay. So that's it. If you don't have any other questions, I'm going to bow out. And so hopefully you guys enjoyed the Power Hour today. I'll be back on Monday with Trading with Sergio. Mondays at 10 a.m. Pacific at 1 p.m. Eastern. Next week, Members Only Live is going to be at 5 p.m. No, 3 p.m. Pacific, 6 p.m. Eastern, but it's going to be on Thursday because it's falling on January 1st. And Friday, back with Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. So thank you very much. Please share. Please thumbs up. Please subscribe. Please turn on all notifications so you can get notified. And let's see. I wish you all Happy New Year next Monday when I'm on, but hope you had great holidays and you didn't outspend your credit card limits. And, we'll see you on Monday. Have a great weekend.